We're here with another podcast episode. Today the topic is credit. So we've got lovely Jane back for another episode. Have you recovered from the last one?
Just about.
Yeah. Let's start with credit. What is it? How would you describe credit to someone who has no idea?
For leasing a vehicle, you would need to have good to excellent credit. So the underwriters will look at you and assess how much of a risk you are for them to loan the money essentially and do the lease for you. So they look at lots of different things. If you've got employment, like a regular income to be able to pay the lease back. If you're a homeowner, if you're on the electoral register, your outgoings, what outgoings you've got, you're not kind of overspending every month. So they do a lot of delving.
Does it just have to be me that has good credit if I were to lease a car, or what if the other person doesn't have good credit, or like vice versa?
Well, for a personal lease, they'd just look at you as an individual. So you'd be the main driver of the car, and then they'd look at you and your credit worthiness and your previous history. For a business lease, they'd look at the company. Ideally, it has to be trading for 2 years. So they've got some kind of history of how the company's performed over the last few years.
So they do like background checks and like
and they'll look at the accounts that are filed at company's house. They'll also look at the directors and check their personal credit. Each fund is different. So some might do a full search on the directors, some might not bother, some might just do a soft search.
Soft search. What is like, is there like different types of searches that you can do?
It'll just be a search that doesn't actually leave a footprint on their personal credit profile. It would just kind of be a bit delving in, dipping the toe in and just having a little look. So what they'd expect is a director to manage their own personal finances, and then therefore they can manage the company finances.
So does that mean that there would be like a deep search then, or maybe that's the wrong word, but like a more thorough search if there's like a soft search?
Each funder is different and they have their own criteria, their own rules. So
it's not called a hard search.
Deep search. Sorry, it's just what came to the brain.
So each fund is very different. So they all have their own different criteria when they're underwriting an application, whether it's for a business or personal. Some will go a bit deeper than others.
Got you. Hard search. Got you. In terms of like credit score, like what would someone be looking for? What would be excellent? Is there like a specific margin that you have to reach, or is it like person to person?
So again, each funder is different. As a general rule of thumb, they would say a good to excellent credit score. A lot of them use Experian, so you score off Experian. Some use Equifax, and then they look at your bank account and other credit sources.
Yeah, because like I have no clue about my credit whatsoever.
Really?
Yeah.
So
like I've just sort of, is it flew by the seat of my pants? Is that the word? I flew by the seat of my pants, and I've never really like looked into my credit, and I do sort of like finance stuff sometimes, so I have no idea what my credit is. How would I go about checking that? Would it is it through is the website like you're saying Experian?
Yeah, usually there are lots of different companies that do it, and you can just check. So there are a lot of people like that who aren't aware of what their own credit score is, but all the time when you're getting out a mobile phone contract or a credit card, this is kind of building a picture and a profile, your own profile.
That's why I'm scared of getting a credit card, because I just know myself too well.
What if I had no credit history at all?
So again, that can actually be a problem. So if the underwriters have no trace of you, they can't assess how much of a risk you are.
How much of a liability?
Yeah.
So would they just turn you down, like straight up?
Yeah, quite often. Not necessarily, but they can just turn you down because they don't. Well, they're like, well, I don't know if you're going to pay this money back.
Yeah.
Because I can't see that you've paid a credit card back, you've paid a mobile phone.
So credit is almost like a level of trustworthiness, where it's just
I
like
reckon so.
you have evidence that you've paid all of this back previously.
Yes.
We can trust you, giving you X amount.
Yeah, that's pretty much it, really.
Understood.
So you can prove that you can afford to pay the lease back. And you can prove that in the past, when you have had credit agreements, whether it be a mobile phone or credit card, anything like that, that you have been able to pay it back and pay it back on time as well without any kind of late payments, because that would go against you as well.
Back onto the soft search and hard search stuff, just one question that I had about that. Does that differentiate if you do personal or like business leasing? Like you can only have like a soft search if you do business leasing, or is it just person to person?
So I don't really want to complicate things
Okay,
because
sorry.
I'm not...
So apologies.
No, I'm just saying I'm not an underwriter underwriter, so I don't get involved in the underwriting side of things at all. For a personal customer, they would have a hard search carried out against them, and the underwriters would delve into their credit profile and history, credit worthiness. And for a business, the underwriters would look at the affordability of the business, how strong the company is, and also look at the directors. And how far into the directors they look is dependent upon that funder.
Yeah.
So it does depend.
Say I were to want to lease a vehicle, right? And I have, like I said, I have no clue about my credit score, but I pay everything back that I have on credit, like on time.
Yeah.
Anything that I finance, I pay it back. Maybe I do 1 or 2 payments late. Would I still be like eligible? Would I be trustworthy to be able to lease?
So again, each underwriter, each funder would look at that case on an individual basis.
Got ya.
Usually, if someone's missed a payment or late with a payment, they don't like that because they think, well, you might not pay us back.
Yeah.
You might miss a payment to us, and we don't want that. We want people who are going to pay us back and pay us back on time.
Yeah,
so that could be a
Does
problem.
that mean that applying for a lease that will affect my credit score as well?
So when you apply for a lease, it will show as a search. So as long as you only have a couple, then it's not going to be too detrimental.
What do you mean by it'll show up as a search? I don't understand.
So it would show on, so it would be a hard search.
Oh, hard search.
But
Sorry. I was about to say deep
Sorry.
search again. I was about to say deep
Oh, a
search
deep-
again.
oh, a deep
no,
search.
it's
Oh,
hard search. Hard search is right.
it would show up, it would just show that somebody has been looking into your credit file for something.
What makes someone like want to leave evidence that they've had a search? Like, why would they do that in that situation?
So why does it show up?
Yeah, because you said that, like, it only shows up when they're doing a hard search.
Somebody who is applying for credit, applying for credit there, applying for credit there, that would show a bit of
Like the frugal.
that would set alarm bells going. So
Yeah,
hang
yeah.
on, you've applied here, so why haven't you gone ahead with that? Why have you then gone to here? It's like, is there an issue? And because you've not been approved here, then you're having to try X, Y, Z.
Yeah, so
places
there's
as
red
well.
flag showing.
Yeah, it would
so
just show a bit of a red flag at all these searches being carried out against you.
But I said frugal, but I meant the opposite of frugal, which is like where they want
what
to
you
spend a lot of money.
Yeah.
So I got mixed up my terms. Say I apply and I get denied because of my credit score. How would I go about improving my score from there? And would I be able to reapply then with like in the future once things have improved?
So what you'd need to do is understand why you have been declined for finance, what that issue is, and then build your credit score back up.
Is that by paying, like, doing more stuff on credit and then paying it back on time?
Yeah, making sure any outstanding debts are paid, paying things back on time. Could reapply, but usually you'd need to leave it a few months. It depends what it is.
You can't
Sometimes
just do it
you
right
need,
away.
if it's right, some things are there for a period of years. So it could be 6 years that it's on your credit, something detrimental. And then the underwriters are unlikely to approve you if something detrimental is still showing. So you would need to leave it a while to try again.
Interesting. Say I've just like started at a new job, say, like, would I have to pass my probation before I was able to like lease a vehicle, or would I be able to do it straight from the bat?
It not necessarily. It depends on your income. It depends on how long you've been at your previous job. If you seem to be staying at a job for a good few years, then you're more likely to stay at your new job. So
it's just showing that I'm able to like stick to like one place
rather than flitting.
So it's
about
so
certain
it's a lot like credit in the sense that it's just like showing that you have the ability to.
Yeah, like reliability.
Got ya.
I think.
So does being self-employed not affect anything in that?
So being self-employed is absolutely fine. They just underwrite you as a personal individual.
What if I'm on benefits? Like, would that affect it?
Not being, because I'm not an underwriter.
Got you, sorry.
Yeah, I honestly don't know. But you have to have a source of income to be able to pay your lease back every month.
Probably be a bit more difficult.
Potentially, it depends. Yeah, they'd look at that on an individual basis.
So just to go back onto the point of like, say I get declined, how would I go about improving my chances of like getting a good credit score and being eligible?
Wow, you're interrogating her.
I'm asking the questions that I feel like we have to ask.
Yeah.
What people want to know.
People want to know. They need the juicy details.
So essentially, it is just making sure you've got some traceability there. You're paying back loans on time. You're not missing any payments. Anything outstanding is kind of dealt with and and cleared up. So that's all positive stuff that will help.
Yeah. Say today I went on to check my credit score. Does just the act of checking like affect? Or...
No. So you can go on and you can look at your own credit score, and you can even apply and get your full report. So that'll show you all your live credit agreements that you've got. It'll show you all your historical
Surely that
credit.
must take ages to
Yeah,
like.
some of them
to
are
come back.
pages and pages. Like
Yeah, it's like a
sending.
book.
Yeah.
But is it a long
so-
process or?
No, it's quite straightforward. I think you just sign up, log in, and some of them you have to subscribe to. Once you do that, that doesn't impact on anything, so that won't affect your credit score. It's just you obtaining your information.
I guess like you would like be adding credit by having a subscription then because you'd have to.
I don't, potentially. Yeah.
so it'd be like adding
I
to
never
the score.
thought of that actually.
I mean, yeah.
Boosting your score by
Yeah, so maybe
by
look out for
subscribing.
the subscriptions to Expedia. It's not sponsored, by the way, but just thought I'd mention it in a simple way for caveman brain to understand. So that the couple have good credit together, but they split up. One of them has bad credit, the other one has good credit, but because they're split. Just for the sake of the viewers, like if someone were to like go through that situation, how would you be able to like? Is there anything that they could do to like help them, or like was it you said a guarantor, right?
Guarantor.
Yeah, like would they would the guarantor be able to like help with that?
So
or is it...
no, not usually. If a person's got bad credit, it's really sad because you can see they've been in this kind of put in this situation by no fault of their own, and it's now impacting on their personal credit. So you can't get credit on behalf of somebody else. So if you've got poor credit, you can't get someone else to stand in, get the credit and give you the car on your behalf. You can't do that. You in your own right have to have the good credit and have the car. That's it.
That's rough. And is that something that like you see a lot, or like is it
quite a bit? Yeah. I mean, life's tough for a lot of people at the moment, and cost of living rising, going up, and it does happen where relationships break down, and that can cause people to miss payments, forget payments because they've got other things going on, and then it impacts on the credit,
That's rough.
which is tough. Yeah.
Jeez.
Sad times.
Yeah, very sad times. Something that you said last time as well about, I remember the term BCHs.
Oh, yes.
So, would I be eligible for that, like on probation? Would I be eligible for BCH?
BCH.
I know, I remember.
Business
What?
contract.
BCH, am I eligible for a BCH? Why am I doing this voice? Am I
It's like
eligible?
you're praying as well.
Am I eligible for a BCH
BCH.
when I'm on probation?
Do you mean probation with the law or probation at work?
Oh, probation at work. I'm not a criminal.
Okay.
Never have been. Never will.
It's not what I've heard. You're in a police chase, aren't you?
Well, that's besides the point.
Anyway, so from the underwriter's point of view, they just look at the business, look at the directors, and that's it. From the employer's point of view, it's up to them if they want to provide a car to someone who's still in the probation period or want to wait till that person's out that probation period before. But yeah, it doesn't matter to the underwriter who's the driver. It's just they look at their business and the directors in that sense.
Can anyone lease a car?
So you need to be 18 or over to be able to lease a car. So although people at 17 can drive, you are unable to take out a lease yet. You need a full UK licence and not a provisional driver's licence. It has to be a full licence. Think,
Bit odd
is
how
it
it's-
European as well?
But isn't it a bit odd though, like how you can be 18 to lease a car, yet you need a credit history, whereas most 18-year-olds realistically aren't going to
Yeah, they're
So
not going to
mo-
have it.
yeah.
credit
So most,
history.
yes, so they'll get declined usually, and then sometimes they'll allow an accommodation deal on that occasion only usually.
So
So that a parent could do it in their name on behalf of the child as long as they're living at the same property.
So there are a lot of cases where someone has good credit, but they still get like denied then?
Yes, that sometimes does happen, and we're not always sure the reason why. So it could be that the credit score looks great, everything looks fine on paper, but there's something in the background that the underwriters have picked up on that they're not happy with, and they will decline the application. Sometimes we can put in an appeal, so we just need a copy of your credit report showing that it's good to excellent, and 3 months bank statements usually, and that shows affordability. So when we've got this evidence, we can go back to the underwriters and lodge an appeal to try and get it overturned.
So on affordability then, like is there like a specific threshold that you have to reach, or is like any salary able to
Every funder
Mm.
will have their own criteria. So some might have a cut-off of £12,000. Some might say an annual income of £15,000. Some might be higher or lower. They'll look at each one individually, but you need a regular source of income. That's because what they don't want to do is give you this financial burden and then you can't afford to pay it back. Because with a lease, you're tied in for the duration. So you need to make sure that whatever happens in those 2, 3 or 4 years, you're comfortably able to afford to pay that lease back. Because if you end the lease early, you've then got an early termination fee to pay as well. So they don't want to burden you with more financial troubles, you know, if you can't comfortably afford it and you've got a regular income to do that.
I feel like you've put the nail on the head with that one. But yeah, thank you very much for watching, and we will see you in the next episode.